simple pattern yields massive profit. My name is Ken W. Chow. I'm the developer of the SuperStructure Trading methodology. And today we're going to talk about a simple pattern that yields massive profit. First, here's the disclaimer. Today we'll talk about how you can approach trading like you're solving a puzzle. How to trade without any indicators, how to read price charts the easy way. Today we won't be talking about moving averages, oscillator divergence, no bands or channels. We will not be talking about fundamental news and reports and all that. Having said that, you can use all of these along with what you're going to learn today. Doesn't mean you got to give up all of those things, because what I'm going to show you will add and turbocharge and help out some of the other tools that you may be using presently. Now, trading objectively using trend strength structures only is what this presentation will be all about. Okay? These structures are clues added piece by piece to arrive at an entry or an exit. And you want the risk profit to be about, you want the profit to risk ratio to be about 2 to 1, and you want your winning ratio about 70%. Okay, and if you have a high quality pattern, that can be doable. You trade profitably like you're playing a simplified version of Wheel of Fortune, that TV show with Vanna White and Pat Sajak. Okay, let's play that game right now. Okay, can you guess what this word is? Well, of course not. You have no clues. How about now? It's a little bit harder still, although I've seen contestants guess and win on sheer luck. Okay, but what if you're given a couple of more letters? Can you guess what this one is? It's a little easier, but you'll still be guessing, because did you guess protein? How about product? A program? Well, it's 1 out of 3, right? If you want to guess with only 3 letters. But what if you were to wait until a few more clues are in? For example, okay, do you know what this word is? Well, yeah. It's easy, because what you're doing here in trading is that you don't need to guess prematurely. What you want to do is get as many clues as possible to confirm before entering the market. Okay? Trading a high quality chart pattern is like waiting for almost all the pieces of a puzzle to be revealed. Okay? Well, let's ask, what is the building block of all chart patterns? What is it? It's the simple pattern, simple zigzag pattern, which I call the measured move. Okay? These measured moves, or MMs, are really the clues to for solving the puzzle. The measure move is the simple chart pattern that yields massive profit. So how do you do this? Right? Why does that yield so much profit? Well, here's a measure move. This is a standard explanation of what a measure move is. It's a simple zigzag pattern. It tells you trend direction. Trend direction is defined as higher lows, higher highs. Okay, and here you have a low that is higher than that low, a higher low. Once you break above B, right around here, you have a higher high. This tells you that it is an uptrend. And generally speaking, AB equals CD. That's called action reaction. Okay. Now later on you'll see that's not always the case, but this is the preliminary accepted situation of what a measure move is. Okay. Again, the measure move shows us trend strength. You'll know whether it's bullish or bearish. Again, higher lows, higher highs, lower highs, lower lows. But it will also tell you how strong the trend is. Okay. So in other words, it can be going up and it can still have some bearish tendency, if you will. It can be going down, and it could be a bullish tendency, strangely enough, because you'll know when the trend will likely continue or reverse, depending on trend strength. Okay, so let's go back to how that is so. Now, what I want to point out is point C. Point C is the retracement from the BC pullback, if you will, against the AB move. So this pullback is very important because the pullback determines how strong the trend is. So if the pullback or the retracement is shallow, meaning the BC leg is a small pullback against the AB move, such as in this situation, where should point D end up for this equation to be true? Up there. So here we have a shallow retracement, and point D needs to be up there before it's all said and done, right? Or another way to look at it is, here's a deep retracement at point C, here's a shallow retracement at point C, point D needs to be up there. Going bearish, it's exactly the same thing. AB equals CD, the retracement at point C is what you want to focus on any measure move, and if point A is up there making point C shallow, where should point D be before it's all balanced, if you will, down there? Okay. Can you see how a shallow retracement can help you on a breakout trade? We'll get back to that in a second. You can look at it from this perspective as well. D retracement looks like this, and point D should be located at there. Again, point D is what we want to look for in terms of a target, or later on I'll show you how you can use that as an entry point as well, going the opposite direction. If point C is shallow, point D should be stretched out to where it's all fully played out down there. Okay. So the deeper the retracement at point C, the weaker the trend strength. The shallower the retracement, the stronger the trend strength. Right? Make sense? Very, very simple. All chart patterns are constructed from many measure moves attached together. Okay, you're not going to get one measure move, obviously. There'll be a bunch of them, as I'll show you in some charts. Okay, when you have these measure moves combined together, what you get are things that people call butterflies, head and shoulders, cup and handles, flags and pennants. Okay, now these two, the butterfly and the head and shoulders, are what I call reversal patterns, meaning you can pick a high or low using a butterfly and head and shoulder pattern, whereas cup and handle and flags and pennants, flag and pennants, what a lot of people are familiar with, is a breakout continuation sort of pattern, right? And we'll cover a little bit of both. Now, measure moves can be connected in one or two ways, okay? Measure moves connect together. And how do they connect together? Well, the first configuration looks like this. You have a measure move, in this case it's going up. This blue part of this measure move starts the next measure move, shown in blue, okay? This is nothing but two measure moves attached together, the way I see it. So everything is just always A, B, C, D, A, B, C, D. I don't go E, F, G, H, I, and all that. So these are just two measure moves attached together. If it looks anything like a 5-wave Elliott wave, it's a coincidence, but then again, all of my stuff can explain other patterns as well, okay? Of course, every time you see a measure move, you always want to ask this question: how deep are the pullbacks, right? That makes, you'll see how this can help you read trend strength, especially trend strength either in acceleration or deceleration to the upside, right? Is the trend going up and getting stronger or getting weaker? If it's getting stronger, what do you want to do? Get on board. If it's weaker, you want to look for a place to go the other way, right? A reversal, a short. Anyway, going down, you have this measure move, and here is the blue part, which starts the next measure move. Quite simple, right? Now here's a chart example to show what measure moves in a series look like. I call these in a series because these are just too strung together. Okay, so to summarize, here are two measure move patterns, one bullish, one bearish, and these are measure moves in a series, right? Now here's the second configuration of how measure moves work together. This is more interesting. Here's a measure move going up, and this leg here, the CD leg of this measure move, is broken down into a measure move. However, there's something different about this particular pattern. This high here doesn't form higher than that high. Okay, so the blue pattern is considered to be within the red. Okay, and as we label it this way, you can see how, again, the CD leg in red broken down to a blue ABCD, and the blue B is lower than the red point B. Now, this is an uptrend, okay? The fact that blue point B, the pivot high, was unable to bust above the red point B, that tells me that this uptrend is not that strong compared to if it had gone above the red point B, okay? So again, this is called a measure move within the measure move, within a measure move. Blue is within the red, okay? And red point C is blue point A, and both are ending at point D's at the same point D. Okay. Now, this is known as a butterfly pattern. Okay, a bearish butterfly pattern. You can short it at point D. Now, a butterfly pattern is nothing but a measure move within a measure move. Okay, I did not invent this. I was taught this many years ago, and you can Google and YouTube butterfly pattern. This is what you get. All right. A measure move within a measure move pattern indicates weaker trend strength compared to measure moves in a series. Okay, again, because that point B in blue unable to bust above the outer point B. Okay, now if the inner measure move has a deep point C, there's probably a reversal forming somewhere. Okay, so again, this is a bullish butterfly to buy a point D. But the key is this inner pattern. You have this measure move within a measure move, blue bit within the red, and point C being deep. This will give a very good looking bullish butterfly pattern to buy at point D. Okay, so again, here's a quick summary of how measure moves work together, how they're strung together. This is considered measure moves in a series. By definition, this is stronger than if you have measure move within a measure move. Okay, so again, what's the difference? You can see how the blue low point there is lower than the red in a series. If it's within, it would look like this. Okay, going the other way, these are measure moves in a series, measure move within a measure move. I love the measure move within a measure move because that's looking like I can find a place to pick a high. Are these Gartleys? No, these are not necessarily Gartleys, but Gartleys have a lot of similarities. Well, they can be explained using the rules that I'm talking about as well. Okay, so let's take a look at an example. Here's the measure move. The blue is within the red. And again, the blue point C is deep. Okay, what's considered deep, by the way? I would say 2/3 or more. Okay, if the BC drop is 66% or more against the AB move, okay, then that would be a deep pullback. Okay, I'm not going to say 50%. I'll say 66% or thereabouts. Here's a top when it's all said and done. Okay, so again, let's ask this question again. Why is a butterfly pattern so powerful for trading market turns? By the way, I love the butterfly. Okay, I love the butterfly. In fact, I like the butterfly a lot more than the Gartley. Why is it so powerful? Well, Again, we talked about it because it shows weakening trend strength in two ways. Number one, it is a measure move within a measure move. You need to have that. And you need to have a deep retracing point C at the inner measure move. I like to show that in blue. Okay. So again, let me just quickly draw a diagram here. Here's a measure move. If it's encapsulated within this measure move, and point C of the inner blue measure move is showing like a deep retracement, then you have a good pattern to go long at point D. Okay. All right, here's an chart example. Can you eyeball it? After a while, you guys can see it. Here's a measure move within this measure move. Buy it at point D. Again, you don't need to buy it at the very low point. There are several secondary entry techniques to buy it down there. Okay. Again, that is a deep retracement. Again, more than 66% preferably. Okay. How about over here? This was one I took about last week. Can you see a pattern there? Here's a deep retracement right there, very deep. This one is a measure move within this red measure move. Okay. So this is very, very good. It's very, very good because you have weakening of this downtrend in one or two ways. The blue especially because it's deep and it is a measure move within a measure move. Okay. But you know what, like all patterns, you're not going to have these things work a lot of times. Okay. And we'll talk about that in a second. Here's a measure move within this measure move. You want that to be deep. That helps to pick a high up there at point D. Okay. Now, here is the S&P daily chart. Remember that drop a month ago in August? Okay. This one I point out because it is coming down. At least on the day that I did this, and I did this on the 21st of September. Okay. And why do I bring this up? Because I have a measure move within a measure move. And this is a deep retracement right there, the inner blue point C. Okay. So this thing went up there and it caused a drop because it's going up in a weakening way. Okay. Now remember I talked about how these things may not work all the time. Okay. It doesn't work all the time. Well, what you want to do is improve it even further. Don't just take the blue pattern within the red and call it a butterfly and go in. What you want to do is improve a butterfly pattern even further for more accuracy and more reliability. How do you do that? What we're going to do is we're going to use the overbought, oversold chart patterns for the reversal zone for more confirmation. So aside from the blue and the red, we're going to look for another thing. Okay, what does this overbought, oversold pattern look like? Well, we're going to go back to the good old measure move again. Suppose you have a measure move with a D point C here, okay? AB equals CD, right? And now what if the CD leg somehow shows up bigger than AB? What does that mean? This is overbought, okay? It's overbought and therefore you can expect a drop. It's overbought because remember we talked about point C being deep as a what? A weakening, a weak up move, if you will, right? And the reason why I like this to use as a confirmation tool is that because point C is deep, the drop from point D would be of bigger magnitude than if point C was shallow. Make sense? So coming off of a point C and the CD leg much bigger than AB, this is a very, very good overbought pattern to use. Oversold looks just like the same thing, but upside down. CD leg much bigger than AB, point C is a deep retracement. This is oversold and is getting ready for a little bounce. Actually a nice bounce because again, point C is deep and it has enough pull to pull it up. As compared to if point C was shallow, right? So how do we do this? How do we actually use this for the extra confirmation of a butterfly. So here's a butterfly pattern, right? A, B, C, D. And what we want is this inner CD leg to be broken down into yet another little pattern. Ideally, I want this to be in there. In other words, if this little red, pink, purple pattern is in there, this will make it an ideal butterfly buy. Okay, because again, you have the inner pattern, an extra pattern here. Here's a AB equals CD going short. The CD leg in blue broken down to this. And again, why is this good? Because if you had a deep pullback and then the CD leg is much bigger than AB, then this is going to yield a nice drop. In fact, it's going to go below here about 90% of the time. Okay, so that would be a very, very good confirmation pattern. And I show that in purple. Okay, now let me ask you some question. What if you have this as a blue pattern and a purple pattern? Are you going to go short at point D? This is not a butterfly. The reason why is that you want that inner blue pattern to be deep. If it's shallow and the purple is also shallow, what you can possibly do is do a breakout trade above here, okay, to go long to right at the point D, because there's going to be a lot of gas in the tank still to go up, because point C is shallow and this one is also shallow. So again, this is what would make it not a butterfly. And if point B was able to bust above a previous high called X, this would be a really bullish pattern that would have a lot of energy going all the way through. Okay, so this is what flags and pennants are all about. Flags and pennants are basically breakout trades or a trade with the trend. And these things can have a lot of good follow through if you see the proper situation. Okay, this was about a week ago. Remember S&P topping out over 2,000 on the 17th during the FOMC situation. Why is this a good pattern to think about as a flag? Well, here is the flag, a bearish flag, and then you break below here to go down. Okay. Now, why is this a good pattern? Again, point C. Point C is what? Very, very shallow, and CD equals AB needs to be down here. When this thing does not bounce very deep, but bounces very shallow, this is what makes a very, very good flag. In this case, a bearish flag, pennant, and all that. Okay. So what we do also using deeps and shallow, the rules is this: observe this: deeps off highs and shallows off lows, or vice versa. Okay. What you're looking for is to see which way the wind is blowing, so to speak. Right? Which way is the wind blowing? Okay. So what you want to do is let me show you some charts right now. Okay. So here is the S&P again on the 60-minute chart. But let me go back to a daily chart. Okay. Again, using that deeps off the high, shallows of the low. This was the S&P. This is the S&P up to date today. And we have this outer pattern over here. Okay. We have this inner pattern over here. Okay. We have yet another inner pattern over here. Okay. Now there is some confirmation over here that you won't see here, but you will see on the 60-minute chart. This thing in purple is a confirmation tool. This being a large pattern, number one, can yield a sustained move, in this case a drop, and being a daily chart, you can scroll down, or should I say zoom in, and look for smaller patterns to confirm that purple piece. Let's do that right now. In fact, let me do a 3-hour chart, 180-minute chart. Okay, from the daily chart down to a 3-hour chart, you can see how this can be fully represented, if you will. Okay, and the key is to see many, many deeps, not just deeps, but deep measure move within the measure move. Right? There's one here. Okay, there's one here, and then there are different variations of looking at this, but you can see how we have some deeps within the blue, blues within the red. All of that's very, very good, okay, for short. Now, Hugh asks, what's the best entry? How do you get in here? Okay. Well, one of the best ways to get in here is to wait until it rolls over. Boom, like that. Once you see that, you know this is on its way. On its way where? On its way below here, right? That's the target. And because you're coming off of this high with we talked about this earlier, with a shallow point C, we're not just talking about this as a little flag to go short. We're talking about this as a little triggering device to tell us that A is coming down, the B is going to head towards here most likely, because we have shallow off of a high right here, and we have deeps off of a low here. Okay, here's a deep, deep, deep. All of these are deep pullbacks before it reached point A. But in this case, after it flipped over from point A, it's a very shallow point C. And from this point on forward, there's a lot of bearish things to be traded. So here you can hold on for a week and make about 80, 90 S&P points, depending on how long you hold it for. Okay. In fact, it went a lot lower. Now I want to also point something out. In this drop here, you can actually get in on some secondary entry. Let's go to the hourly chart. Okay, what does that mean? Remember we talked about deeps and shallows? Okay, this is medium deep. This is about medium deep. Oh, shallow. So this is actually accelerating to the downside. All right, from here is medium deep, medium deep. This is a little, once it loops over here, then it has a long ways to go. Now, if you ride out a pivot and see how shallow that one is, you could get in even more. Okay, but at the very least, if you go A, B equals C, D, you can see how that one can give you some good profits. Let me pull it up a little bit. Okay, all right. So if I go A, B equals C, D, you're over here. But when this thing goes a little bit further, then all right, it's over what? Oversold. Okay, if this is shallow and then just get a little deeper and then deeper over here. Now you're looking at this thing coming down to what? A slowing down of the downtrend. Get out your short, right? So if you short over here and you roll it down to where you have these type of things, this is where it is, the downtrend is slowing to where it's not wanting to go down anymore. All right? So this is basically what the situation is in terms of looking at how these patterns are strung together, attached together, and how they work together. All right. So you can learn to read charts with confidence once you get these patterns down. Okay. And you'll know why a pattern is of high quality, either a breakout situation that can really have legs to run on many layers, if you will, on many different layers, on both the outer red layer and the inner blue layer. Okay. In other words, something that's exactly counter to a butterfly. Butterfly have a deep and then measure move within measure move and all that. What if you have the opposite? That's when the trend is actually running. That's a good for a breakout because it's a non-butterfly, if you will, and that will cause it to run. Okay, and you can make money consistently trading once you know whether it's going to be sided with the bulls or the bears. Okay, now I'm offering one-on-one mentorship. That's why I want to present this to you. I used to do classes, webinar classes. Now I'm offering one-on-one mentorship. If you feel this is valuable, I've trained some students and they're doing fantastic with it. Learn all the other rules using the measure moves to objectively determine trend strength. Okay, and the rules basically is a combination of these measure moves, how they work together, how they're strung together, and so forth. Okay. And once you learn trend strength rules, you can learn how to trade a confirmed reversal pattern. Okay, these reversal patterns are butterflies, heads and shoulders, and all that. Trade confirmed breakout patterns. Okay, why does it confirm a breakout? Well, it's telling you that it has a long ways to go. Okay, high probability retracement zones. Now, I've also this has never been talked about before, but when you have a retracement zone, there are certain things to look for using shallows and deeps that will tell you whether that retracement zone is of high quality or not. Okay, no preliminary targets, how to play stops, and how to manage trades using trend strength. Okay, and once you do that, you'll know how to handle an unusual looking butterfly, how to trade ugly heads and shoulders, how to look for hidden cups and handles if you want to look for it as a cup and handle. And of course, the length of the flagpole is important for trading flags and pennants. The longer the flagpole, the more it means that you have shallow retracements inside that flag or pennant, okay? And you'll know how all of these come together. Again, after you learn this, it'll be very intuitive, and you'll be saying to yourself, oh, okay, I kind of see what this is all about, okay? Now, you also get free bonuses when you sign up on a one-on-one with me. The first free bonus is you're going to get a recorded 10-week advanced butterfly course. I did this a few months ago. I recorded it with a pilot group of students, and these are the 10 lessons in these 10-part butterfly course. It's a 10-part butterfly course. It's not a 10-week actually, because they're all recorded. It was recorded once a week. How to stalk a butterfly, confirmation, when not to trade a butterfly, how to enter orders, initial stops and targets, managing the trade, secondary entries. You can also trade butterflies without fibs, or you can use fibs if you want mathematical accuracy. Why would you need a back-to-back series of butterflies? Okay, and my personal secrets for day trading profits. This is as a 10-hour, 10-part series of recorded videos. Each one is 1 hour. This is $9.97 value, and that is the first bonus. The second bonus is, I call this superstructure trading. Okay, this is an approach that I've developed. I actually wrote an ebook called How to Pick Highs and Lows Accurately, Safely, and Profitably using 3 proven steps. This ebook is has a lot of diagrams, a lot of charts. It also has a video companion. That's right. The 6 chapters in the ebook are broken down into 6 video clips where you can watch it. You can also read it, all right? But you can also watch it as well. So you get both of these as the second bonus, and this is available. This is about $97 that we're selling right now for these two. Okay, but that's your second bonus. Now, if you want to get started or want more information, you can call Frank at Pacific Trading Academy. Okay, there's your website. Okay, or if you have any questions, you can call me or email me at ken@superstructuretrading.com. Okay, if you want a copy of this video, you can always email me directly, and I can send this to you. But if you want to get started or know more information about this one-on-one mentorship, give Frank a call. So I have a question. The question is, how do I know where the target is for the butterfly? Well, if this is a high quality butterfly, meaning very, very good measure move within measure moves, then the target about 80-90% of the time will be below blue point A. Okay, blue point A. So the target will be 1 tick below here. And if you get in within here or here, wherever that turn is, you have good risk-reward ratio. Okay, so that's a good question, and that's what makes a butterfly so powerful, especially a confirmed butterfly with a lot of good stuff behind it. Okay, so let me see what other questions you might have. Jim says, oh, the price for the services. You give Frank a call. We have different programs depending on your needs. Okay, give Frank a call, and he'll explain all that to you. More questions here. Let me see. I'm working full time. Can I use pattern to enter? Yeah, you can look for longer term stuff here, like the S&P chart. If you find a pattern on a large chart, you can definitely get in with a stop and then be a swing trader. How applicable is this Forex? Anytime you have freely traded markets like the Forex, okay, and any time frame at all, you can trade this. In fact, you can trade it down to a 1-minute chart. Okay, if you see a good pattern, the shallows and deeps work the same way. Do you use time frames in judging the butterfly quality? Well, I like to have a butterfly on a large enough chart, even in day trading, like a 15-minute or a 10-minute chart. And what I do is I zoom in using down to a 1-minute chart to look for that confirmation purple pattern if I need to. Okay, so you want to zoom in a lot to make sure that the smaller pieces conform to the bigger pieces, and then you have a high quality pattern. On this chart from May to August, I don't see measure move clearly. I've heard a lot of people who have trouble volatile time. Well, what you want to do is look for higher lows, higher highs. Okay, the measure move is very, very simple. As long as you have a move from a higher pivot low to a higher pivot high, is that zigzag pattern. Okay, and you want to disregard all the junk in between if you need to, if you have a lot of them, I should say. When you see a bunch of equal opposite bars after run down or up, is that a sign for the top or bottom? Not necessarily, TJ. Okay, just because you see a bunch of equal and opposite bars doesn't necessarily mean that. You got to zoom out to see what the bigger patterns look like. Could you offer a discount on the ebook on video? You could give Frank or myself an email so you can clarify what you mean by that. Okay. Um, just curious, what trading platforms do you use? Mike, I use Sierra Charts through my broker. Okay. It's a free charting service. Actually, it's like not free. It's $6 plus $6. Each exchange charges $6 a month, so it's not that expensive at all. Maria asks, do these patterns work well on all? Yes, they work well on all time frames. All time frames. Here's the 5-minute chart of the S&P. I'm sorry, of the crude oil, and you can see what I mean by having this pattern on all time interval charts. This is a measure move. It is a measure move within this measure move, okay? But wait, this pattern over here, the CD leg here, that I'm erasing right now, there's a confirmation piece over there that makes it very, very good. I'll show it in purple. This is a very deep retracement right here in purple. Not a double bottom, but it's a very deep retracement. By the time it gets up above here, you know you're possibly in a topping situation. Well, where do you get in? Well, what if I get in? Boom, right there. Okay, now I don't care where this high is, because that's where I'm going to be looking at putting a stop, and I'll be looking at short, and of course down here is where the target is. Okay, so there is a 2-to-1 risk reward or thereabouts. Okay, there's your risk and there's your reward below here. All right, and this is a 5-minute chart. There's a bearish butterfly. But wait, there's a little baby one over here. If you look carefully over here, there's also a baby one over here, but this is not that clear on the 5-minute chart. If you break it down to a 1-minute chart, you're going to have a little situation up there as well for this drop. Okay. All right. Let's take a look at the S&P. This was a strong drop. Okay. But wait, why did it suddenly not go down anymore? Why did it stop? Why? It has to be some reason. And more times than not, you're going to find a reason, and the reason is typically a butterfly is a measured move within the measured move. Again, that point C in blue is very deep, okay? But wait, this is actually a confirmed butterfly, because now this leg here is not just a straight move, it's a confirmed move because now the purple is also a deep retracing and CD leg bigger than AB. Somewhere around here, you're going to see a move up. Where do I get in? I'm on a 15-minute chart. I can look to the smaller time interval chart and look for that to be the triggering device that the bottom is in. Okay. All right. So let me do that on a 5-minute chart. So by looking at a 5-minute chart, after witnessing this, boom, I can also go down to the 1-minute chart. This thing went above here. In fact, it went a lot higher than here. Okay, so that's basically how to trade a butterfly using a secondary entry. All right, so yeah, do give Frank a call, and if you want to get started, or give myself a call or an email.